Hey guys, have you ever thought about making real money in real estate without buying just another house? Today, we're diving into commercial real estate investing in the USA, from Kansas to Los Angeles, and even overseas. If you're a beginner wondering how to get started, how to raise private money, or how to find more leads, this video is for you. Let's jump in. What's commercial real estate? Anyway, so first things first, what is commercial real estate investing? Unlike residential real estate, which is all about people living in homes, commercial properties are businesses that generate income. We're talking office buildings, retail centers, warehouses, self-storage, hotels, resorts, and even land for development. Here's the key. In commercial investing, value comes from income, not curb appeal. A property's worth depends on rent, lease terms, tenant quality, and location. That means if you want to invest in Kansas or Los Angeles, you've got to think like a business owner, not a homeowner. All right, let's break down commercial real estate investing 101. Beginners don't need to start with massive properties. Start small, focus on analyzing cash flow, expenses, and risks, and learn step by step. One commercial property can replace multiple residential units in terms of income and efficiency. Money comes mainly from rent, and profits can grow when the property appreciates. You need to understand operating expenses, maintenance, vacancy rates, and tenant management. Basic math and financial analysis aren't optional. They're essential. Pros and cons. Why invest in commercial real estate? The pros: higher income potential, longer leases, stable tenants, and opportunities to increase property value by improving operations. But it's not all sunshine. The cons: requires more capital, more complex contracts, and mistakes can be costly. Vacancies hit harder, and legal or financial issues are more serious. Education, preparation, and risk management are key. How to get more leads and find deals. Finding deals is all about effort, not luck. To get more leads in commercial real estate investing, try working with brokers and commercial property advisors, networking with other investors, joining real estate groups and associations, contacting government agencies selling property. Don't forget off-market deals. They often have better prices and less competition, and openly marketed properties, perfect for learning and tracking market trends. Raising private money. Next up, raising private money for commercial real estate investing. It's all about building relationships, credibility, and clear communication. Educate potential investors about deals, risks, returns, and exit strategies before asking for money. Private funding usually comes through partnerships, joint ventures, or syndications. Make sure your agreements are legal, roles are clear, and compensation is fair. Skipping this step can hurt your reputation or even land you in legal trouble. Investing. During crises and overseas opportunities. Wondering if you can invest during tough times? Yes, but carefully. Crises bring distressed properties and motivated sellers, but risks go up. Focus on strong cash flow, tenant stability, and conservative financing. And if you're thinking about commercial real estate investing overseas, remember, taxes, currencies, and management can get tricky. The principles are the same, but local teams are essential for smooth operations. Marketing and advertising strategies. When it comes to investing ads in commercial real estate, flashy paid ads aren't the answer. The best strategy is relationship-based. Talk directly to owners, provide value through information, and build trust. Credibility beats hype every time. Quick tips for beginners that actually work. Okay, beginners, listen up. This is the part that makes or breaks your first deals. First, treat every property like it's a business, not just a shiny building. That means looking at income, expenses, tenants, and leases like a pro. Second, tenants are everything. Good tenants equals steady cash flow. Bad tenants equals headaches and empty pockets. Always check their business or financial history. Third, don't try to do it all alone. Build your dream team. Brokers, attorneys, accountants, lenders, people who know their stuff. Fourth, understand commercial financing. Unlike residential mortgages, lenders focus on the property's income, not just your personal credit. So know your numbers, ratios, and exit plans. Finally, due diligence is your superpower. Don't skip inspections, background checks, or financial verifications. Rushing this step is how beginners lose money. Think of it like this. Commercial real estate is a marathon, not a sprint. Focus on steady cash flow, smart decision decisions and learning from each deal, and the growth will come naturally. Final thoughts. Commercial real estate investing isn't just for big investors. Whether you're in Kansas, Los Angeles, or thinking overseas, the principles stay the same. Understand your deals, manage risks, build a strong team, and act like every property is a business. With patience, preparation, and consistent effort, you can find deals, raise private money, and grow your portfolio over time. And that's a wrap. If you found this helpful, hit that like button, subscribe for more real estate insights, and drop a comment on which city or type of property you want me to cover next. Remember, commercial real estate isn't about luck. It's about smart decisions and disciplined action. See you in the next video.